Investors and traders, welcome to the channel Market Chart Pattern. Today we'll be taking a look at the key US banking stocks in the ETFs, as we always do in this segment. A huge welcome to the new subscribers and the returning subscribers and the viewers. Thank you for watching my content. So we'll start with taking a look at the Spider S&P Regional Banking ETF. This is something which we have been following pretty much ever since the whole situation with the Silicon Valley Bank began to unfold in the early part of February of this year. And we identified key potential support zones as the price was falling to see what the stock is actually likely to do. So in this regional KRE, the regional banking ETF, these are the smaller banks such as Silicon Valley Bank was part of it. Very large bank, but again a bank of that was considered as part of the regional banking side of things. So here what we have seen is a pretty strong decline in the ETF prices. And if we come right here around the 3rd of February, that's where it was stopping. But if you compare it with the overall S&P 500, the broad index, one thing to note is that it was telling us that perhaps things were not as rosy, but that's the way it is. And what we were watching the last time when we did the video on it was this level 34.45, and we kind of raised this as a potential key support because the price had fallen just below the 78.6% Fibonacci retracement, and this index is pretty oversold. And what we can see is that as long as this 34.45 level holds a rally perhaps, and the rally could actually go all the way up to this 46.26 46.16 level, or roughly $46, which is the 38.2% Fibonacci retracement of this move, of this swing. And one of the things that we really like to take a look at this channel is the concept of market symmetry, which is that markets repeat over and over again. And what we have seen is in this entire decline, the highest rally from a price magnitude perspective was of this much. And if we just project it from here, that also is pretty much around this 38.2% Fibonacci retracement, coming right about $47.25. So in this zone of about $46 to about $47 and a quarter is what we can expect this rally to go up to, because of extremely oversold situation that we are in. Let's take a look at XLF. So this is the Spider Select Sector Fund Financial. This is actually the ETF which has a the major banking index stocks as well. And here what we're looking at is, when we did the video last time, we had drawn a little pattern formation in this yellow shaded region, because we were looking at this ABCD formation right here, and that was going to give us a that was going to give us this here a important level of support, because of 78.6% Fibonacci retracement coming in around $31 per share level. So I just realized that actually this ABCD is drawn incorrectly. That's why I also lost a bit of my chain of thoughts. No, actually it's not. Excuse me. That's because of this purple line here. So as long as this shaded region and this 78.6% Fibonacci retracement coming around $31 per share level holds, we could have this price moving in this potential ABCD one-to-one projection to the upside. And in fact, we could see some of the stocks in this index rallying up to around $34 per share level to $34 and 33 cents. That's the kind of possibility exists as long as this level of point C holds, which comes around the $31 per share level. And also, what is something to be noted is that price is actually right at this trend line resistance level. So we'll have to watch over the next few coming trading days in the early part of the week how the price is actually going to um, you know what the price action is going to look like. Let's take a look at some of the individual banking stocks. So we'll start with this Western Alliance Bank Corporation. So it is one of those smaller banks, and let's just actually go back to right here. So this is the 2nd of February, beginning of 2023, and look, the stock was trading at about $80 per share level, and look where it is right now. In fact, around 13th of March, that's the area when SVB, Silicon Valley Bank situation was unfolding. The stock had actually fallen to about $7.50. So from $80 to $7.46 to be precise. It's a pretty significant drop. And what it seems to have done now is it just come back. The price has come back and tried to retest these lows, and it wasn't able to take the lows down. So it's just now consolidating here. But just wanted to give you one stock from these smaller banks. In fact, this stock also pays 36 cents dividend. Um, but is something that we have to watch. The price a little bit up the 20-day moving average. That's a little bit of a positive sign from a momentum perspective. But again, we have to be really careful looking at this stock as it trades in this range right here. Okay, so let's take a look at the Goldman Sachs. So the Goldman Sachs. So this actually in this stock, the bearish symmetry remains intact. So what is bearish symmetry? This is something which we really talk a lot about in this channel, as the markets like to repeat again over and over again. So the bearish symmetry is that if you look at this swing, this price swing in its entirety, so if we just go from low to high right here, I'm going to just delete this to make the chart clear. The highest rallies that we have seen was of this much magnitude, and again the another rally of this much. And what did happen to the price? The price just found resistance also coming from this trend line here, and it was not able to take uh, go much higher on closing basis above this symmetry. So the bearish symmetry is still intact. So I'm just gonna type here actually bearish symmetry still in play. Okay, so there we go. Let me actually make it a little bit bigger, make it 16. That's fine. Although we were getting a little bit more optimistic because it seemed to have found some support or consolidated around 61.8% Fibonacci retracement. So now again, if this 61.8% Fibonacci retracement, roughly around $320 per share level, is not able to hold the price, then the chances of this moving further down are increasing. And in fact, one of the bigger pattern formation that we have been looking for quite a long time is this blue shaded region, which could actually see the price move down to about $240 per share level. It's quite a far away from here, but that's going to be a pretty strong level if the price, in fact, indeed reaches this level. Between that, there are quite a few things, support levels that we will be watching on a daily basis, that it needs to break to the downside for this price level to be achieved. Let's take a look at JP Morgan. So JP Morgan is just trading in a range. This resistance coming from the 61.8% Fibonacci retracement right here. It's a pretty strong one, and it's just sideways action. And for the price, it needs to break out either to the upside convincingly and break this $145 per share level, or it is likely to go back and test the bottom of this range and perhaps break to the downside. In that case, the next 61.8% Fibonacci retracement comes around $117 per share level, and there is a possibility that on a break of that, it can actually go and test these lows right here at 101. Even there is a possibility breaking that, it can go and actually test the 2020 lows at about $77 per share level, roughly speaking. And now let's take a look at the Morgan Stanley. So Morgan Stanley stock was one of those stocks in the banking sector that seemed to have more potential, and in fact the price action looked a little bit stronger compared to some of the stocks that we had seen in the banking, in the major banks. But what we're looking at recently is that the stock tried to rally when the earnings were out, etc. But I found a pretty strong resistance. In fact, we had this at $92 per share level as the 1.272 expansion. Let me try to draw it from here so that's easier to see. Price did not exactly reach that level, but found a great amount of resistance, and it has just been falling. We also have drawn this trend line support right here. In fact, this is a channel formation here, and we were anticipating that perhaps price will find some support from here, but looks like that that support level might be actually in fact becoming some sort of resistance now. Price from a momentum perspective is also below the 20-day moving average, and last Friday was a black candle, which means a negative candle, a bearish candle. So there is a possibility it is actually going to go and test this $78.20, which is 78.6% Fibonacci retracement. The ABCD formation can actually take the price lower down to test the lows of July of 2022. Below that, what is also possible is that there is a gap formation right here coming from the 21st of December 2021, right around here, excuse me, 2020, and the stock might be going and trying to fill that level. That possibility also remains, and that's gonna be the big ABCD formation right here. Yeah, if we just boom, there we go. Pretty much something similar to what could actually in fact happen in Goldman Sachs stock. So let's take a look at Citigroup. Citigroup price action has been one of the worst price actions. In fact, after the March 2020 lows, this stock actually did not even take its old highs out. So it's one of the weaker ones. And here we have this pattern formation highlighted in the yellow price. We were anticipating the price to find great amount of resistance, good amount of resistance from this level. In fact, this is what it has done. Some support came in from 61.8% Fibonacci retracement. At one point, it looked like it was a abandoned baby bottom formation from a candlesticks perspective, but the price is just going sideways, and it remains. It looks like the bearish sentiment remains. In that case, what we're looking at is 41.34 as the level where the price might actually like to target this region. If the support levels, particularly this $45.19 level, is not supported. Okay, let's take a look at the Wells Fargo. So Wells Fargo is actually one of those banking stocks that has actually been going down for quite a while. Oops, I moved something which I shouldn't have by accident. Okay, there we go. And what we had actually seen is the price has been going down since 10th of February 2022. And one of the key things is again the concept of market symmetry. So the bearish market symmetry is still in play, and if we look at these rallies, they have been of equal magnitude. What we were anticipating was that perhaps what could happen is, because the stock found some support from the 78.6% retracement, and it has also done this in ABCD formation here, that in fact it might actually be in this purple line 1-to-1 to the upside, going right to the $43.45 level, or $43.50, which is going to be a strong resistance level. So there's a possibility the stock might actually try to do that. However, on a failure of this, it's a bigger ABCD 1-to-1 formation, which could in fact see the stock go down to about $26.70 to even $25.80. So that's gonna be the 2680 is the 78.6% Fibonacci retracement, and the ABCD can actually take it a little bit lower to about $25.90. So guys, this is what we're looking at, some of the key US banking stocks in ETFs. If you like our analysis and how we look at the market using pattern recognition, Fibonacci retracements and projections and extensions and expansions, please do subscribe to the channel. Also hit that bell icon button, that way you will know when new videos are posted. Thank you very much for watching. Good luck and good trading.